What's going on, traders? Sandra O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is December 21st, 2021. We are getting awfully close to Christmas Eve. Hope everyone has all their gifts picked out. I think I still have like one more gift to get, so I got to get on that. Anyway, today we're going to talk about the price action in the indices. We actually had a pretty good day today for a change. And we're going to talk about, some of the trades I took. We're going to put it all in context. Before I do that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. Last but certainly not least, do not YOLO your entire account to any one of my trades or anyone's trades for that matter. All right, so let's check it out here. So box scores. We had the S&P 500 as measured by the SPY finish up 1.73%. We have the NASDAQ QQQ finishing up 2.24%. IWM small caps were our biggest winner for the day, up 2.85%. And the Dow Jones finished up 1.59%. I actually added an additional column into this table here, and this is the range column. All this is showing is, in terms of, the high of the day and the low of the day, where did the index close? So, for instance, the S&P 500 with his 94.9% range score means that, it closed very close to the top of the daily bar. So we had a really nice range for all of these indices in the upper 90s. Volatility declined precipitously in all of these indices, and we had really nice breadth. You can see we had above 80% across the board. So yeah, really nice day. Finviz heat map. Take a look at this. What a difference from the past couple days we've been seeing. And we've been talking about like Santa Claus rally. Now it's coming. Now it's coming. And it just seemed like this Santa Claus rally, like, I think I talked about this in yesterday's video, like, are we really just going to sell off into Christmas? Like, is it going to be like Christmas Eve on the half day? And it's like, oh yeah, stocks are down another 1% on volume. It just seemed pretty nuts. And so now we got this nice day of price action. You can see we had Nvidia up big, Tesla, Amazon, Facebook, Google, really nice breadth across the board. In a lot of these areas of the market that really have been struggling for the past month, you can see they bounced very nicely. And at this point, it looks like, hey, at this point in the year, a lot of this selling has been done. Like I said yesterday, these fund managers, they don't wait for December 31st and go, all right, now time to square up my book. A lot of that happens, before Christmas. Okay, so let's take a look at these sectors. We can see best performers on the day. We had KWeb up 6.71%. We had solar energy stocks up big as well. And then you can see, mobile payments was up big. This ARK fund was up 3.84%. I took a position in ARK a few days ago. And yeah, so basically all the laggards really had a very nice bounce. And then utilities and consumer staples, which had been leading, they actually pulled back, ever so slightly. But really nice broad-based rally. Style factors, look at this. So high beta. What's so nuts is like, I remember from when I used to work at Vanguard, we always use this statistic. Like, if you miss the top 5 days of the stock market for the past decade, you missed out on XYZ returns. And it really is the case because, like high beta, for instance, high beta had been bleeding for the past couple weeks. Like, oh my gosh, this thing's down again, down 1%, down 2%, like whatever it might be. And then just in one single day, we're up 4.16%. So anyone that missed that, it's like, you missed some of the move. You can see high div, low vol, and min vol were at the bottom of our list today in terms of performance, which is good. You can see momentum was a nice big winner as well. So were cyclicals. So yeah, very risk on day. And then seasonality, we're in this final part of the year where the seasonality is very strong. Okay, let's take a look here at these headline indices and check this out. So the S&P 500 just kept running even into the close. And my trend model, as of the close, was at a +1. It actually flipped to +3 overnight. So we'll see if it opens up there tomorrow. Yeah, the trend is looking much better. And this has been, just a slugfest of a month. Like, looks really since about Thanksgiving. That was when things got really hairy and we had that first big red bar. And the market's just been chopping around in this very big range for the past 6 or so weeks. Let's take a look at the weekly chart. I think it's really good to just zoom out every once in a while and see where we've come from. So like right now, this weekly candle looks beautiful. This is a really nice hammer candle, and we've had about really since the beginning of November, we made a lot of upward progress in the market. And ever since really the week of November 1st, we haven't made any more progress. It's just been a slugfest. 1, 2, 3, 4, 5, 6. This is the 7th week where we've been in a range. And going back to our daily chart, we moved above our 4600 pivot. This was the 0 dealer gamma level as well. So now dealer gamma has flipped positive once again. We're now above this monthly value area low, which is great, at 46.36. So yeah, now we have this 4700 pivot up here. First we do have to look at this monthly point of control at 46.79, spot 75. But in terms of these three levels, the market has been bouncing around the 4500, 4600, and 4700. It looks like next up is that 4700 mark. Moving over to the hourly chart. It's a really nice close. So check this out. We reestablished ourselves inside of this weekly value area, and we triggered a bullish 80% rule, which is awesome. So if that bullish 80% rule is fulfilled, that target's about 46.71. Let's check out our NASDAQ. NASDAQ is up 2.28%. Also really nice recovery here. The NASDAQ has not established itself inside of this monthly value area though. Let's take a look at the Russell. Russell was up, wow. After the close, you can see it had even more of an advance. It was up 3.19%, geez. So the Russell continues to look like it's gonna break down, and it's doing this like rope-a-dope action where it always looks like it's gonna falter, and then some invisible hand comes in and just bids this right back up. Now you can see this green candle engulfs 1, 2, 3, 4, 5, really like 6 of the prior days of price action. So very nice move from the Russell. And the Russell is actually, wow, it's out above, yeah, because we engulfed those 6 candles, we're now above this weekly value area high. And then the Dow Jones, dogs of the Dow. This thing tends to lag to the upside and the downside. Also had a really nice day. Now it's above the 20-day simple moving average. So at the index level, great move today. We are pretty oversold and overcooked to the downside. So this, this move we've had over the past 2 days, definitely very welcome. And let's take a look at some of the movers from today. A lot of these names, like ARC, for instance, up 3.84%. Really nice move. Unity Software, it's a name I put on maybe a week or so ago, up 6.23%. Very nice move. And Expedia, this is a name I have some March calls on in this name that I added, a couple weeks ago. To be honest, I added those March calls like right over here, and this thing completely fell on the Omicron news. And I knew like this Omicron from the very beginning, it really didn't seem like it was that big of a deal. Now the narrative is starting to turn into, hey, this Omicron's highly transmissible, but it's a bit more mild. So I think that's a great thing for these travel stocks, if that's the case, because that could mean that these travel stocks could actually have a meaningful run higher. With these travel names, it's always been, they have a nice run, then we get a COVID scare, nice run, then we get another variant, nice run. It's like the same thing over and over again. If with this Omicron, it ends up being like, hey, almost everyone gets COVID, but it's not all that bad, that should really help these travel stocks. Another thing I wanted to bring up, so I coded today an additional indicator, posted about this briefly in our Discord, but this right here, it says core rut, and then it has a 0.78. Really what I wanted to do was, I noticed throughout this year, like during this 6-week choppy period, one of the things that I want to improve on for 2022 is, I noticed I got caught in a couple of areas of the market that were showing some relative weakness. And so I was like, how can I prevent myself from doing that in the future? So I built this little indicator. Really what it does is that for every single stock that I pull up on my Thinkorswim chart, it calculates the correlation of that stock with the S&P 500, the Dow Jones, the NASDAQ, the Russell 2000, and also the ARK Innovation ETF. And what it does is it calculates those correlations, and then it looks which index is this security most highly correlated with. And then what it does is it spits that out. So here it says correlation RUT, which means the Russell 2000. And then it also gives you the actual correlation. Because let's say if you're trading, and let's say you're in an environment where, like today, for instance, the Russell 2000 was very strong. It was up well over 2%, up over 3% after the close. In that scenario, hey, I want to trade something that's very highly correlated with the Russell. And Expedia, just so happens is very highly correlated with the Russell. Conversely, let's say if a certain group, just gets very weak, like let's say like the Dow Jones, the market's going up, Dow Jones tends to lag to the upside. So you're looking at names that are most highly correlated with the Dow Jones. You might want to avoid those. So I think this will really help just in terms of looking at like, when I buy this stock, what am I actually getting exposed to? So yeah, I have that code in our coding and data science chat, so feel free to jump right in there. Also, if you're not a member of the Pristine Capital trading community, feel free to go to pristinecapital.net and you can sign up there. Okay, so that is Expedia. Let's take a look at some of these other big movers. So this company app actually looks very good here. It's out above this 20-day simple moving average. See a lot of names putting in pretty solid recoveries. Let's take a look at some of my trades for today. And we'll take a look here. So I traded Affirm. And this one I noticed very early on in the session. I was watching the options order flow pretty closely. We did get a bunch of aggressive orders above the ask for Affirm. And this stock really was a darling over the past, couple of months. And then when these growth stocks got hit, Affirm really got hit as well. So this stock entered into it at 1036 at 98.95. And at 1036, this was when the market was kind of pulling back. And it was very ambiguous as to whether we were just going to rip to the upside or even flip negative. So yeah, with this one, purchased a position. I actually entered this thing at a pretty good trade location throughout the day. And I took a small target on my position as we hit this about like 101.5 level. See, I took a small target and then kept the rest on, and then I moved my stop higher on this trade. So in doing so, and this is another thing I really want to incorporate into my game for 2022. So by taking a small target for a small winner, and then also moving my stop up, now pretty much I can't really lose on this trade so long as my stop is honored. So yeah, it's a good feeling just be like, okay, I took my target, moved my stop up, boom, like I'm pretty much like the risk is paid for. Other thing I did early on in the session, about that same time, I closed out these Roblox calls. These are January 21st, 2022 100 strike calls. Close these out for $7.90. I had paid $10.05. And I just put, this name is not showing relative strength here. Let's take a look at Roblox. And it ended up having a good close. So let's see, Roblox. I would say it didn't do so bad. Roblox, yeah, finished up 3.95%. At the time when I was doing that trade, Roblox was trading pretty negative while the indices were positive. Also just wanted to make some room and kind of reduce some options exposure. Also, someone in our community shared this video. It was like pretty bad about Roblox, or like just the way they're treating their developers, and it was pretty bad. So once I saw the weakness this morning, I was like, let me just hit out of this thing just in case. If I was in common stock, probably would have been a different story. And if I reestablish my position, I'll probably just reestablish it using some common stock. All right, let's take a look at our options order flow. And we'll take a look at our options races. Today's combined flows. Let's check it out. We have Tesla. Are the Tesla bulls back? Let's see. We have 2.2 billion of flow. We got Amazon SPY, Q's, MO, Nvidia. Yeah, pretty much the usual suspects. I see AMD on here as well. And let's check out our TradeScape. Let me take these filters off. I had these on throughout the session. There we go. Okay, perfect. So let's check it out. So MO, this is actually a tobacco company. It's really like a consumer staples company. Let's check out MO. Okay, yeah, this one, I'm assuming with the rally that we had in consumer staples, you know, this one really nice action for MO. This is a gigantic move for this stock, but it's not really trading in a very good trend. And then we have Tesla. Let's see what happened here. A mix of puts and calls. And let's see what Tesla did. Tesla, nice candle. To be honest though, like if the market starts ripping to the upside and this one moves along with it, I'd be looking to short Tesla. Yeah, because I think there's just so many competitors that they're facing, and the price action just has been, you know, pretty weak lately. Let's see. So we have that. Apple, I'm sure it's just a ton of calls. Yeah, the 170 strikes out to December. These are pretty short-term calls. So looks like we got a lot of punters out there going for Apple. Yeah, and then Nike had a good day of price action. 170 calls going up for this Friday, or this Thursday actually. And then we got some 170s for December 31st. A lot of short-term stuff. Let's take a look at Nike. Nike reported their earnings, and this put in, so sometimes the reason why, like with a power earnings gap setup, you wait for the next day is because if you get a candle like this is not really a good candle. It's like the stock auctioned up, but sellers came right in and auctioned it lower. So it's like that little bit of ambiguity. So if you wait until the close on the first day, then you can really see what the market thought about the earnings print. Then the following day, you can go in and attack it. So that is Nike. Let's take a look at one more. Yeah, Micron. I do believe this one put in a better candle after reporting earnings. And we have, yeah, just a lot of calls for, I'm seeing December 23rd on all of these names, and then December 31st. Micron, yeah, this is a very nice power earnings gap candle. You can see nice volume, gapped up, and we actually had a very nice daily closing range. Stock was up 10.54%. When you look at the weekly chart, you know, we're getting very close to those prior highs. If we can get past this little area of supply, then this stock, you know, there's really nothing holding it back from getting up to potentially $100. So yeah, Micron looking very good. So yeah, overall, it was good to have, you know, just a solid day of price action. It just seems like this month of December, and really the month of November as well, just this holiday season, it's been very challenging, you know, with the Fed, with these stimulus bills being canceled and maybe put back on. You know, a lot of, you know, just a lot of obstacles. We're overcoming them. And yeah, it was good to see the trend finally break to the upside. With that being said, that about does it for this market recap video. Hope you all had an awesome trading session, and I will see you all tomorrow.